After a stellar 2019, investors look ahead to 2020 for stock picks. Analysts are skeptical that the stock market's gains, which are at more than 20% in 2019, will remain in the double-digit percentage range next year. They expect volatility to return in the midst of a U.S. presidential election. Some investors wait for stocks to get cheaper before they step in and scoop up buying opportunities. Companies poised to outperform, they say, will be ones that can continue to grow their earnings even if the economy slows. From iPhone maker Apple to beverage giant Coca-Cola to e-commerce titan Amazon, today, let us take a look at the 10 best stock picks for 2020 based on USA Today research reports. Number 1. Apple AAPL. Strong anticipated demand for Apple's 5G iPhone next fall is projected to boost the company in 2020, according to Piper Jaffray analyst Michael Olson. In December, Olson reiterated his overweight rating on the stock and raised his 12-month price target to $305 from $290, citing robust iPhone demand and better-than-expected performance in wearables such as the Apple Watch, AirPods and AirPods Pro. Apple shares finished Thursday at $289.91. Number 2. Microsoft MSFT. Analysts at Bank of America named Microsoft one of the firm's top software picks for 2020, driven by growth in the software giant's cloud computing unit that offers data storage. Analysts at the bank bumped up their price target on the stock to $200 from $162. Shares closed Thursday at $158.67. The stock outperformed the broader market in 2019, rising more than 50% while the S&P 500 rose nearly 30%. Number 3. Amazon AMZN. Amazon stock is expected to benefit from strong growth in its cloud computing and advertising businesses. Investors have been concerned about a hit to profits from the costs of one-day shipping and investments in Amazon Web Services, but those worries are largely priced into the stock, according to UBS analyst Eric Sheridan. He gave the stock a buy rating with a $2,100 price target over the next 12 months. Amazon stock closed Thursday at $1,868.77. Number 4. Coca-Cola Co. Looking for a stock that pays steady dividends? Coca-Cola can satisfy investors' thirst with its stable earnings growth and ability to ride out volatility, analysts say. Sean King, analyst at UBS, gave the beverage giant a buy rating with a $63 price target. Shares finished at $55.02 Thursday. Number 5. Disney Dis. Disney is among one of the top stock picks in media, largely driven by the success of its entrance into the streaming world with Disney+. In November, Bernie McTernan, an analyst at Rosenblatt Securities, reiterated a buy rating on the stock amid strong subscriber growth and increased his price target to $175 from $170, up from Thursday's close of $145.70. Number 6. Nike NKE. Wall Street expects Nike's solid digital sales growth to continue as the company transitions from a wholesale retailer to a digital direct-to-consumer model. In a note to investors, Morgan Stanley analyst Kimberly Greenberger reiterated the firm's overweight rating on the athletic apparel company and raised its price target to $118 from $108. Shares of Nike finished Thursday at $100.71. Number 7. T-Mobile. T-Mobile's stock is projected to rise over the next year despite what happens with its pending merger with Sprint, experts say. Jonathan Atkin, an analyst at RBC Capital Markets, maintained an outperform rating on the telecom giant and lifted its price target to $94 from $87, citing subscriber momentum. That's up from Thursday's closing price of $77.40. Number 8. Alphabet Google. Google parent Alphabet was among the worst performing this year among its larger tech peers, but Wall Street keeps a close eye on the stock. The company was fined $1.7 billion this year for restricting rivals' ads in Europe, though some of its antitrust issues are beginning to wane. Jason Bazinet, an analyst at Citigroup, reiterated the firm's buy recommendation and boosted its 12-month price target to $1,500 from $1,450. The stock ended Thursday at $1,362.47. Number 9. Goldman Sachs (GS). Investment banks and financial services companies such as Goldman Sachs are poised to benefit from the Federal Reserve keeping interest rates low next year because of the firm's lack of interest rate and credit risk, says Keith Horowitz, analyst at Citigroup. The bank upgraded shares of Goldman Sachs to buy from neutral and boosted its price target to $255 from $220. Thursday, shares closed at $231.21. Number 10. Micron Technology (MU). The slumping memory chip industry could be turning a corner. Analysts expect demand for memory chips used in PCs, servers and USB drives to accelerate in 2020 as trade tensions thaw. Wedbush analyst Matt Bryson upgraded Micron to outperform from neutral and lifted his price target to $65 from $44, up from the stock's closing price of $55.11 Thursday. Here's the Bunos. McDonald's MCD shares of McDonald's underperformed the broader market in 2019, but its CEO shakeup, along with its innovative menu options and expansion of delivery capabilities, could drive revenue growth. Christopher Carroll, an equity research analyst at RBC Capital Markets, initiated coverage on the stock in December with an outperform rating and target price of $218. The stock finished Thursday at $197.06. PayPal is in the midst of winding down its financial ties to former parent company eBay, which some investors fear will be an earnings obstacle. Analysts say PayPal is in a strong position to drive account growth after forming partnerships with 4 high-growth platforms: Facebook, Uber, Paymentus and Mercado Libre. Mark Palmer, analyst at BTIG, reiterated a buy rating on PayPal with a price target of $130, up from Thursday's closing price of $109.75. Thank you for watching. Please don't forget to subscribe and check out the link in the comment section below. This is Tough Trending Report.